Hi, my name is Paul, and welcome to the 13th episode of my monthly portfolio series, where I invest $100 every month into Canadian stocks. This video marks the first full year of investing into the monthly portfolio, so I have some extra fun stuff to go over to highlight just how the portfolio progressed throughout 2022, which was a pretty difficult year for most of us in the market. Now, first things first, I am still going to be upholding the same set of goals and rules for the portfolio in 2023, but I'm not going to be going through them here since this episode is already probably going to have to be a little bit delayed just because I'll be traveling back home from visiting family. That said, you can always go and check out the document outlining them, or you can just go back to the first episode of the series since I go over everything there in detail. And the links to everything are in the description box below this video. Before we get into the earnings and news, I want to reflect on how the portfolio looked back when I first started in January of 2022. Back then, I didn't realize how many stocks Wealthsimple offered with the option to purchase fractional shares. So on top of having $2.20 of spare change left over after investing, the portfolio had only two securities. The first was the Morguard North American Residential REIT, which made up 71.4% of the holdings, and the other was Knight Therapeutics, which made up the remaining 26.6%, and both of these positions are still held in the portfolio today. Checking in on how that first month's investment performed over the course of the year, assuming I didn't invest any additional money into the account in the following months, things clearly didn't go as planned, as I'm sure most of you can relate. I have a goal of achieving a 12% annualized rate of return, and as you can see from this graph, not only did I not hit my one-year target, my portfolio actually declined in price by 2.75%. Now, most of this was due to Morguard's share price depreciating, but some of that was at least offset by the sizable dividends that were paid throughout the year. So, all in all, I managed to turn $100 into $97.25, which is not exactly a challenging feat, considering I could have had a better result by just putting that $100 into a checking account. And I could have even gone to McDonald's and gotten an ice cream cone, and I probably still would have been ahead. But at least I can take some solace in knowing that my one-year performance fared better than the benchmark ETFs, all of which underperformed my portfolio. And the worst of the group, by far, was the S&P 500, which declined by over 9.4%. Next was the Canadian Large Cap ETF, which was practically neck and neck with the Canadian All Cap ETF, both of which declined by a bit over 4.5%. The best performer of the group was the Global Value ETF, which only dropped by 3.4% and was within 1 percentage point of matching my portfolio. Noting that, none of this data should be taken all too seriously. A one-year period is rarely going to be a good indicator of long-term performance, and there are some extenuating circumstances that aren't shown in this graph. For instance, all of the benchmarks are set to receive dividends on the 9th, which will likely create a boost in their performance, especially in the case of the Global Value ETF, which only receives one large dividend on a yearly basis, as opposed to a quarterly payout like the others. Plus, in reality, I didn't stop investing or tracking the competition after the first month, and the regularly reinvested capital at different prices has led to results that are different from what the one-year returns show. Before we get to that though, let's first go over what happened in the portfolio's fiscal December 2022. At the start of the month, I of course added $100 of cash to the portfolio, and I received $3.08 in dividends. So I took all of that money minus one pesky cent that found its way back into my account and invested into 4 Morguard North American Residential REIT shares, 3 shares of Knight Therapeutics, and 0.335 shares of MTY Food Group. As of the market's close on January 5th, 2023, the $103.08 that I invested increased by 1.19% to $104.30 when accounting for the dividends received in the month. My portfolio's best performer in December was the Morguard North American Residential REIT, whose shares appreciated in price by a meager 0.3%, but that came in spite of the greater market sell-off. Morguard itself had no real material news come out this month, so I don't really know whether it's just a rising general level of sentiment about real estate, or if people are starting to realize Morguard's discount, or if it's something else entirely different that caused this performance. Unlike Morguard, Knight Therapeutics did not hold up as well, declining by about 4.36% in the month. With this one, there was again very little news to come out about the company, aside from them receiving a $38.5 million loan from the International Finance Corporation, denominated in 4 Latin American currencies. Now, this loan is a bit curious, since Knight is in a very cash-rich position, so we could end up seeing a big acquisition sometime soon. Alternatively, we do know that the company loves to buy back its shares, so it could be that they think that the share price is exceptionally cheap at the moment, and they want to use a chunk of the cash in order to maximize their allowed repurchases. Speculation aside, there wasn't really a reason provided for the interest to take out the loan, but Knight's CFO did note that because the loan was denominated in currencies that are subject to hyperinflation, they could use this capital as a hedge against the currency depreciation. This would involve converting the borrowed money into a more stable asset or currency, then converting back into the inflated currency and paying off the loan for a gain. This isn't too risky considering the loan is for less than 10% of Knight's tangible book value, plus Knight earns money in all of those currencies from their business operations, so Knight shouldn't have any problems paying back the loan, irregardless of whether or not this hedge works out. And that's assuming they even go through with this plan to begin with. That was all there was for Knight Therapeutics this month, and last up we have MTY Food Group, whose shares performed pretty dismally, sliding in price by 5.64%, which probably also was because of the overall market sell-off, since there was no new news that came out for MTY either. Unfortunately, Morguard's dividends weren't enough to keep the whole portfolio from dropping down to $1,185 as of the market close on January the 5th. This equates to a loss of 1.22% on the $1,200 of contributed capital, or a loss of 2.38% if you include the cost of reinvesting the dividends. So my performance last month wasn't great, but the benchmarks performed much worse, and all of the ETFs that I track lost between 3.94 and 5.52%. This month, the worst performer was actually a two-way tie between the S&P 500 and the Canadian Large Cap ETF. Meanwhile, the best performance outside of my portfolio once again came from the Global Value ETF. This month led to a pretty big shakeup in the overall results, with the S&P 500, the Canadian Large Cap, and the Canadian All Cap ETFs all dropping below my portfolio, which is now second to the Global Value ETF, which is the only one of the group to still remain in the black. Switching over to this graph, you can really see the impact of the crash on the benchmarks. Meanwhile, my portfolio just sort of hovered its way into second place. That said, there still isn't too much to celebrate here since my positional improvement hasn't come in the form of gains, and I'm still a good bit further away from my goal than I was last month. But I'm not that far behind, and I still expect that I will manage to surpass both it and the Global Value ETF in the future. That said, I can't do that without investing this month's money. So to kick off the year in an exciting fashion, I'm going to be sticking with the usual suspects, since they're still my best three ideas, and they're all still hanging around at prices well below where I believe their intrinsic values lie. So the plan is to pick up 4 shares of Morguard, then I'm going to buy 4 shares of Knight Therapeutics, and the rest of the money is going to be invested into MTY Food Group. Now let's hop into the account and see what I get. Okay, so here we are inside of the account. We currently have $102.89 to invest, so I'm going to start with Morguard. I'm going to get 4 shares of Morguard. Okay, next we're going to get our Knight Therapeutic shares. We got 3 of those. And we're going to put that last $21.50 into MTY Food Group. Okay. And that's still pending, so I'll see you back once everything has been settled. Okay, I'm back and I've received 4 shares of Morguard for $16.38 each, 3 shares of Knight Therapeutics for $5.29 each, and I bought 0.363 shares of MTY Food Group for a price of $59.20 per whole share. So as of January the 6th, the portfolio now holds 56 shares of Morguard worth about $925, roughly 3.65 shares of MTY Food Group worth roughly $216, and 28 shares of Knight Therapeutics worth nearly $148, with no cash left over after investing. Transitioning over to the dividend tracking, December was, as projected, a touch lower than in the previous month, since in that month, MTY paid out its quarterly dividend. This means that the only income for December came from the Morguard North American Residential REIT, which paid out $2.88. That's going to be enough to buy this 450-gram pack of rice noodles, which is on sale at Food Basics, and should be enough to make at least a few partial meals from. So we're definitely getting somewhere with these dividends, but it's going to be a while before we can sustain our basic needs with the portfolio's income. As for next month, Morguard is also expected to be the sole distributor, and they're projected to pay out $3.12 on the 52 shares held at the ex-dividend date. Coming over here, you can see that there's a pattern starting to form, where there's a big month from the combination of Morguard and MTY's dividends, followed by a smaller month of just Morguard's dividends, and then, following that month, there's a small step up from the larger number of Morguard shares that are paying distributions. As for the cumulative income, the portfolio has now received a total of $17.11 in dividends during the first year, having grown the portfolio from scratch. I'm going to make a prediction here, and I think that when I compare this year's earned dividends to next year's, we're going to see a huge step up, thanks to the compounding reinvestments spinning off even more money. Just to throw out a random number for fun, I think that next year the portfolio is going to earn over $75 in dividends. To put that into perspective, that's almost 4.5 times what the portfolio earned this year, so I'm really thinking that things will turn out well. Currently, if I were to just leave the portfolio as is and collect the dividends next year, I could expect to receive $43.39, assuming none of the companies change their payouts. That's an increase of over 7.9% from the previous quarter, and the monthly portfolio is currently sitting with a yield on contributed capital of 3.34%. And that's about all that I have for this one. But before I conclude, I do want to say thank you to everyone who watches my content, because I really enjoy having an outlet like this to talk about my investment ideas and opinions, and it's just nice to know that there are so many of you who are interested in hearing what I have to say. So thank you all for watching, and I hope you guys had a great holiday, and I hope you have an even better 2023. With that, please remember that this video is not financial advice, and I am not a financial advisor. This video was made entirely for the purpose of providing inspiration and insight into my personal investment decisions, and it should not be used as a substitute for doing your own research. This video does not have the information required to make good investment decisions on individual securities. So again, I am not a financial advisor. I'm just a Canadian who likes to invest and share my opinions with others. And in doing so, I hope that I was able to provide you with something of value. And if I did, then please consider sharing it with anyone else who might also benefit from it. Thanks for watching all the way to the end, and enjoy the rest of your day.